G'day, I'd like to explain how the principles of financial leverage apply to every profit and loss statement, including your own. And once you understand those principles, you can apply them to your own business with the result that you should make more profit. So what leverage means is doing something small to make something big. And in this case, we're going to see how making some small 2% efficiency tweaks in a business will result in a massive 50% increase in profit. So let me explain. To kick off with, I'd like to suggest is that we've got a profit and loss statement which looks like this. $1 million worth of sales, $600,000 gross profit, that's a 60% GP percentage, and operating costs of $500,000 with an operating profit of $100,000. So what I want to do is decrease the operating cost by 2%. Now, most businesses can actually find a way to do this if they really try, and it's about improving efficiency, doing more with less, or in this case, doing the same with slightly less. So 2% of $500,000 is $10,000, or to put it another way, saving $20 from every $1,000 we spend. And when we do this, that $10,000 will go straight to the bottom line. So the profit is now $110,000, which is a 10% increase in operating profit. So the next thing we could do is decrease our cost of sales. And if you're able to achieve that, what's going to happen is we're going to increase your gross profit. It's going to increase your gross profit percentage, and that's going to trickle down to your bottom line. And in this example, we've now increased our operating profit by $18,000. So two small 2% tweaks in our costs have increased our profit by 18%. Then an obvious one, of course, is to increase sales price. So let's increase the price by 2%. And that's going to increase our gross profit percentage further and trickle down to operating profit. And you can see we now have $138,000 operating profit, a 30% increase from our starting point. And then finally, of course, we can increase sales volume by 2%. So if we do that, we'd obviously increase the sales revenue. We'd also have to increase the cost of sales as well because we're selling more stuff. And the result of that is that we would have made $150,000 operating profit from all of these little tweaks. And that's a 50% increase on our initial level of profit merely by implementing those 2% tweaks to operational efficiency. So there's some really good food for thought there. And if you understand this model, you can apply it to your own business. Now, every business is different, so the financial leverage will be different, but broadly speaking, the higher your GP percentage, the higher your leverage, which means that a small tweak will produce a really big result to your bottom line. And if your gross profit margins are lower, the impact on your bottom line will be lower, but it'll still be there. So the important thing is to understand these principles and apply them to your own business, then work out how you can tweak a financial model by creating a more efficient business. And it's worth remembering that if you want to grow your business, it makes much more sense to first make it efficient and then grow it, because trying to grow an inefficient business is likely to result in unnecessary levels of stress to you, your staff, and your customers. So grab your own profit and loss and apply these principles to your own business and start using them to make more money. Good luck with it.